Shares of Boeing rising after the aviation giant reported a narrower than expected loss for the first quarter as it expects to reach the maximum production of 737 MAX aircraft later this year. While these results do not include any impact of tariffs beyond March 31st, CEO Kelly Ortberg saying the company has the flexibility needed for the current macro environment. Joining us now to break down these results, we've got Tony Bancroft, Gabelli Funds portfolio manager in aerospace and defense here. Tony, good to see you here. So, one of the things that was really catching the street's attention here, it seems, around Boeing is them petitioning to be able to get production back to peak or ramp up production more fully around the 737 MAX line here. If that is the case, what would the pass-through look like for Boeing's financial performance, and how immediately would you expect to see that?
Yeah, it's great to be back. I'd say the 38 a month rate cap is probably the critical component to Boeing's cash flow performance going forward. They're just right now they're just subscale. They're not able to utilize the operating leverage that they have with that installed base of infrastructure, and until they really get back to near that 38 a month, they're gonna be struggling. I think over the next few months, hopefully we'll see some good news. Obviously, so far this week we're seeing good news, and from last week as far as this morning the earnings release and them talking about a steady rate increase in production. They're still confident with the 38 per month they can get by the end of the year, and then the wins on the F-47 in defense, and then just overall stabilization of the business is all good signs.
Tony, how good is this news? Is Boeing fully out of the woods in your view?
I think it's incremental. Obviously, this tariff issue is still going to be a headwind until there's some resolution. Obviously, Boeing exports 80% of its of its products internationally, and I think there's a lot of moving parts in there. Of course, countries that are potentially doing retaliatory tariffs like China. They have their own issues. They need these parts. 40% of their fleet is a Boeing aircraft. They're trying to make their own aircraft, the COMAC, which is essentially a Boeing minus, a 737 minus, using all mostly U.S./Western highly engineered aircraft parts, including engines. So I think Boeing still we have to work through that, but in the near term, this is definitely positive incremental news, especially with the cash flow burn is not as bad as people expected.
How significant is Boeing selling parts of its business, or at least the part of its business that it recently identified that it would do just fine perhaps with doing away with, or at least having someone else own that asset? How much does that give them some breathing room financially and on a capital basis, and how long do they need to stretch that for until they are able to ramp production back up for some of the most embattled parts of its fleet production, and then secure more orders along the way?
Yeah, that's a good point, Brett. I think Boeing CEO Ortberg has been very direct about getting off of these sort of non-core businesses. Boeing's an aircraft maker, right? They build large commercial planes, and they have a defense business where they build fighter aircraft. As far as the Jepson digital pub business, it's a great business. I mean, I used every pilot in the fleet. Every pilot has to bring pubs with them, and obviously there's a digital version now. But it's a great recurring business, but it's not really core to their operations, and there's probably a better owner for it. I think maybe the space business, there's probably going to be some thought process going into that. Of even though I know CEO Ortberg talked about getting more Starliner launches this year, I think in the long term, do they want to be competing with SpaceX in that business when it's probably not as core to them? I think it's important that they get some cash in the balance sheet, pay down some debt, and then focus on their core operations, which is building essentially the 737. They've got to get that at rate.
Tony, we got just about a minute here. I would be remiss to not ask you about the roaring market rally that we are experiencing at this moment because of, in part, this Wall Street Journal exclusive reporting on the Trump administration considering slashing back those proposed tariffs on China. As you can see, your S&P up over 3%, your tech-heavy NASDAQ now up over 4%. I know you focus on aerospace and defense. Just how big of a deal is it for that sector specifically if we do, in fact, see a rollback to this degree that's proposed in this reporting?
Yeah, Matt, it's definitely a big deal, but I think sort of taking the next layer, aerospace and defense is somewhat specific here as far as, it's a secular growth industry. It's got Boeing itself has a 6,000 plane backlog, a decade-long backlog by both OEMs, and people are flying more. That's just the reality. And I think the bigger issue is these planes it's a razor blade business where these planes need to be serviced and maintained, and you need to get new planes. The efficiency improvements in newer planes should drop right to the bottom line of these airlines. And more of the world is flying. So I think in the long term, the world's going to need these planes. And tariff, no tariff, this is sort of a demand that's just unconstrained right now, and it's probably continued to be for quite a while.
Tony, thank you so much. Appreciate it.